Hey everyone, welcome to CoveredCall ETF Investing, your central hub for deep CoveredCall ETF data. And today we're going to be looking at the distribution changes on the American CoveredCall ETF side of things. We'll look at new funds that have come out that I've included in the tracker, and also just the yield changes as well. What are some of the highest yields that you can find on the American side of things when it comes to CoveredCall ETFs? So if you like what you see with the tracker, you can always pick it up for yourself in my Patreon, which will be the top comment or in the description below. So let's get started. Now we're going to look at we're going to look at the USA tab here. We'll look at the yield changes with USA funds. And we'll also talk about what's new with what's been added recently. So let's actually just go through that for starters. SPYT, I decided to add not exactly a CoveredCall fund, but some of these funds have been making their way in. They do what are called credit call spreads. Anyway, it's not a strategy I fully understand, but it is more income based, and of course, you know, we're all about CoveredCall ETFs here. But defined ETFs, they have a way of, you know, making themselves into elevating themselves into the income conversation. So anyway, wanted to put SPYAT in there. Most likely going to become a popular fund. Let's see, what else did I put in here? Anything, again, with 3 stars means that it's new. So we got QDCC, which is the S&P Quality Dividend CoveredCall ETF, which will, just like other American Global X funds, these funds will just bounce around, just like everything else. It's very rare to see a stable distribution from American CoveredCall ETFs. And then last but not least, by ProShares, I got IQQQ, the ProShares NASDAQ 100 High Income ETF, which currently yields about 10%, somewhat in line with its S&P 500 counterpart. And again, for those who maybe didn't catch the Canadian yield changes and distribution changes, what I've added to the tracker this month is, let's filter it by Americano. Just these visual cues, the monthly changes, percentage changes on the average 3-month volume tracker tab and the AUM tab. So this will be a good way of just being a really awesome visual cue to hone in on, you know, the healthy funds that are growing in AUM, the not so healthy funds that are receding in AUM. Instead of just looking at numbers, trying to do quick math in your head, this is just an easy way of getting the info you want from your funds, or maybe potential prospects of what funds could be healthy to invest in for the long term. That's the whole point of the AUM and average 3-month volume tab, is to see which funds are healthy, both with AUM and also their liquidity as well, right? Again, if these funds, not all these funds are going to be around for the long term, so we want to at least be able to track and identify the funds that we think are going to have longevity versus funds that maybe aren't going to have as much success in the long term. And as an example, here, we'll go through year to date. That's an easy way of seeing which funds. Maybe you want to identify funds that, okay, what's not growing in AUM. This is already filtered, but it just so that you can see it, filtered by sort Z to A first. So then you'll see right at the top here, the most healthy funds going on. QQQI, I mean, it started with like basically nothing, and then it has gone berserk since then. But for just the example of this, we want to go down to, say, funds that are maybe in this range. So you can see funds that are, you see red. Those are a good eyeball indicator that, oh, maybe I was going to invest in this fund, but maybe not so much anymore because I see it's declining in AUM. I don't know what the future really holds for a fund that's continuously going down in AUM. Now, I know the tracker has only been out for as of this, it's been out for almost 6 months. By the end of June, it will have been out for 6 months. So now we're starting to see a lot more, like the patterns are becoming a lot fuller. I think, have a better idea of what is a healthy fund versus what is not. Again, I'll be tracking this month over month for years to come as long as I'm operating this channel and operating the tracker here. So again, just a good way of identifying what's healthy, what's not. Maybe you have some of these funds in your portfolio already and you want to just check out, hey, I just want an easy way to see are my funds growing in AUM. Having the tracker it's really awesome to have specifically for that reason. All right, so let's go back to the USA tab, and we're just going to go through some of the yields actually right now. We'll sort it. Now, typically on the American side, these guys go balls to the walls, right? Everything's bigger in Texas mentality, which is always interesting to talk about because there is such a contrast between here and the Canadian yields, which you typically see more in the 10 to 12 upwards to the 15% range, maybe the odd one that's a little bit higher, but the 20%, which is on the high end in Canada, on the US side of things is maybe average. So the biggest yield we got going on, just like last month, we had 3 funds: Coiny, Alti, which is just basically the most volatile stocks out there. And then we got this Russell 2000 Enhanced Options Income ETF. Now, none of these funds are leveraged, not yet. There are a couple coming down the pipe here, but those will be on a future tracker. So nothing has leverage. Anyway, what else do we got here with some of these yields? Here, I'll scroll through them really slowly enough that at least you guys can kind of digest, what has kind of these larger than life kind of yields, and then maybe other funds that have more sustainable yields. Now, this is usually the wheelhouse I like to play in. To me, 10 to 12% is kind of my happy place with where I like to see yields at. I think that at that rate, there's still, I think, enough. And it, again, all depends on how these funds are constructed, but I think there's enough leeway for the fund to naturally grow price appreciation, but you still get paid month over month, that you can still compound away, and you don't have to feel like you have to sell off your some of the funds or have to reinvest some of the distributions just to keep up with the potential of the fund paying out maybe just too much, and you see these big dips month after month with potentially some of these higher yielding funds. So what kind of funds are in that wheelhouse that I'm talking about here? Well, I like the diversified stuff first and foremost in that regard. IQQ, ISPY, these rate in that 10% range. I'm actually curious to see where GPIX and there's GPIX, 8% GPIC. So that's the by Goldman Sachs S&P 500 core premium income. There is a NASDAQ 100 version of that, but it can't be up that high. Where is that fund? GPIQ, there it is, right, just straddling 10%. I think it was closer to 11% to start the month. But nonetheless, very basic CoveredCall ETF funds. I like it because of its simplicity. ISPY, IQQQ, these funds are a little bit more strenuous to understand, but there's potential that I could like this as well. There's other funds like SPY, SPY. Now, where did SPY end up? It's got to be higher up here. There it is. Another stable fund. growing lots in AUM month over month. And we see sort of these other diversified funds that kind of hang out in this range that I personally like. With the higher funds up here, there are a lot of single stock ETFs, and of course, the more concentrated you are in something, the more potential you get for outsized gains, outsized performance of the sort. But it's just not as diversified. So when you get shocked, right, it's going to get shocked pretty hard. And you can kind of see that with some of the year-to-date performance with these top yielding funds since the start of the year. Now, I'm going to be including total return in the next tracker. So you're going to see total return for 1 month, 6 months, year-to-date, and 1 year. Whereas total return you can see for 3 year and the 5 year. But so many of these funds are so new that they just haven't been long enough. So anyway, so you'll see that in the next tracker. So as we kind of go down the list, you can see that as yield decreases, all of a sudden the yields overall, or I would say the price performance overall, starts to pick up a little bit, and that's just the trade-off, right? You got potential for more price decreases, or I should say, right, capital price decreases with higher yields versus the ones that are kind of a little more middle of the road. You have a little bit of a better shot at getting a little bit of price appreciation. And that's also good on the psychology as well. I think we just like to see green. Of course, we naturally like to get paid every month, get a dividend every month, especially if it's high. But to compound that psychological, I would say that a psychological win is just letting the market do its thing and seeing some green in your portfolio. If you believe, hey, the markets will go up over time, then not a bad way of, I would say, placing your bets on, a fund that can still pay out really well and give you a little bit of price appreciation as well. Okay, so let's also check out monthly distribution changes. These funds, naturally, none of them are stable. I want to say maybe SFOL and Maxi by Simplify ETFs might be the only very stable funds. Now, I will also say that I think SPYI also does a good job of staying fairly steady as well. Their other fund, which I can't, what is it? QQQ. Yeah, QQQI, I think it might be trending in that direction a little bit. We'd have to look at the AUM tab for that. But anyway, let's just go through the monthly distribution changes. You can see a couple of these funds garnered, 100+%. Anytime a distribution is going up by, even 10% month over month, hey, even 5%. Like if a fund is going up, especially if it's stable and it's going up 5% in 1 month, that's awesome to see. I'll admit, even 2% I'm pretty happy with. Just any kind of growth or stability, but nonetheless, these funds could be up this month, and next month the same funds you could see a big detractor. But anyway, I'll go through these kind of slowly just so that you can see for yourself which ones have gained. And what do you know? We didn't even get there, but what did I mention? SFOL and Maxi are stable. They're paying out the same. What I didn't expect was this Defiance ETF one, TRTREZ, which is basically short for Treasury Yield Bond Covered Call ETF. Its year to date is down. Its distribution, it's actually decreased year to date versus, or I should say not year to date, but lifetime. Lifetime, it's gone down actually 34%. And then we got a bunch of these other funds that have also decreased. Let's see if there's anything really notable in here. But again, we got Yield Max, single stock ETFs in there. We got a bond cover call ETF in there, but for the most part, DYLG, the only kind of diversified fund in here, along with DGIA, both decreasing pretty substantially. with a lifetime decrease of 15%, and DGIA with a lifetime increase of 0.19%. Okay, I think that's really it for yield changes, distribution changes month over month. Again, if just pick up the tracker for yourself if you want to explore this a little bit further. If you like that snippet from the CoveredCall ETF ALLSTAR tracker, there is a 2.5 hour video over on my Patreon, which will give you a month's worth of content that you want to binge watch. If you are interested in things like what does a delisted fund look like, that's eventually going to come off the tracker, so there's something for that. There are things like looking at Defiance and Yield Max, which is the better fund manager to go with. There's going to be obviously changes to EQCL, big changes in that regard that you can check out over there. So if you like what you saw and you want to pick up the tracker for yourself, just head over to the Patreon page, and it'll be in the comments or description below. And if you like what you saw, as always, then do the cliche thing and hit all the buttons to like and subscribe, right? And I'll see you all in the next video.